Are you a small business owner or a professional struggling with tight tax deadlines and confused TDS rates? Well, Budget 2026 just handed you a massive win. From extended ITR deadlines to much awaited clarity on the rate of TDS for manpower supply, the rules are now officially gonna get changed. But there's also a new fee trap if you miss your audit deadline even by one day. In this video, I am breaking down the three key takeaways that will save you money and the fee trap that could wipe out those savings if you aren't cautious enough. Let's dive in. Change number one, ITR deadlines are shifting. For non audit businesses, professions, partners of non audit firms, and trusts, the ITR filing due date is now going to be 31st August from 31st July. So, due date of ITR for this financial year, ITR 3 or 4, where no audit is required for FY26, would be 31st August 2026 instead of 31st July. This additional time is to prepare your books of account. Now, this reminds me of two things. One, if you have salary income, you would be filing ITR 1 or 2. No change in that. Deadline is going to remain as 31st July. And for audit cases where you file ITR 3 or 4, again the deadline is going to remain the same, 31st October. Now, if you're wondering what these ITR 1, 2, 3, 4 forms are, I have separate short videos on each of these forms. If you're interested, you may consider watching it. The link will be in the description. Now, there are two other changes related to ITR, and these changes are not just for small businesses or professions, it's applicable to all the taxpayers. One is related to revised return. You now have a longer window to revise your returns if there is an error, 12 months instead of 9, that is up to 31st March of the subsequent year instead of 31st December, by paying an additional fee. If the total income is up to 5 lakh, this fee is 1k, over that it is 5k. Next, related to updated return. Budget 2026 has added two new situations in which you can update your return. One, even if you had reported loss in the initial ITR, you can update your return if and only if you intend to reduce the loss. So you can't increase your loss just like you can't reduce your income. Next situation, even after you get the reassessment notice, you can update your return by paying an additional 10% tax over and above the applicable rate. This was not there earlier. Now, if you're wondering what this applicable rate is and what is this updated return, I have a separate video on this topic. If you're interested, you may consider watching it. The link is in the top right corner. Change number two. No more legal disputes, because supply of manpower is now going to officially get classified as work, not professional services anymore. This freezes a much lower TDS rate of 1 or 2% under Section 194C instead of 10% under Section 194J under the old Income Tax Act 1961. The corresponding section in the new Income Tax 2025 is Section 363. So this change is gonna end the confusion and help your cash flows. Change number 3. This is related to welfare funds like EPF, ESI payments that you make to the government as an employer. At present, if you are even one day late in making these payments, due date is 15th of the subsequent month, say you pay on 16th. This leads to permanent loss of tax deduction of expenses in respect of employees' contribution, effectively increasing your income as well as tax. Now, what's the change? Even if you delay this payment, you can still claim deduction if you pay it by the due date of filing of your ITR at par with employer's contribution. So remember, no deduction of employees or employer's contribution if you don't file your ITR within the due date. The biggest change in Budget 2026 is the decriminalization of tax loss. Rigorous to simple imprisonment, imprisonment to fine, penalty to fee, and so on. It sounds good, right? But here is the trap. If you delay filing audit report in Form 3CA or B and 3CD, in the old act and Form 26 according to the new act, and due date for this is 31st October. So if you file it after 31st October, as of now you have to pay a penalty of 0.5% of turnover or receipts subject to a maximum of 1.5 lakh, and this penalty was usually not imposed by the income tax department. Now what's the change? Budget 2026 has now introduced a graded fee system. Mandatory, you may not be able to file your ITR if you don't pay this late fee under section 428C. Now what exactly is this graded fee system? If the delay is up to 1 month, then a flat fee of 75k. Delay over 1 month, it's double, 1.5 lakh. The bottom line, Budget 2026 wants to trust you, but it's demanding absolute discipline in return. You have more time for ITR till 31st August, but zero leniency for your audit. So audit your accounts early, update your TDS rates, and stay cautious. And remember, these changes are going to be effective from 1st April 2026 onwards. See you in the next video.